So guys, welcome to my YouTube channel. Uh, Today we are going to talk about the Amacovis rule, or rather it's known as the translation of price at any given point. So if you have been struggling as a trader, you don't have any clear idea of where the market is will be heading to, or where the market is supposed to go to, then I believe that this piece of information will be helpful to you. So let us begin. So the truth shall set you free. One of the best things that I would like to do is I want to be honest with you guys. Okay? So because in this market there is nothing that is random. There are no surprises in this market. Everything that happens in this market is well known and it's predetermined even before that event takes place. The truth is that the market cannot spare anyone. It does not care about anyone except for the 1% who are unknown. And the 1% who are unknown, basically, they are the people who came up with this idea. They're the people who developed this market. So we don't know them. So from the statistics, is that only 5% of traders are profitable. But if you look closer, this 5%, we still have traders who lose. Okay, and the institutions also fall into this category of the 5%. When we're talking about institutions, we are talking about trading firms such as hedge funds, the big renowned trading firms, with exception of the central banks. Okay, so uh, why am I saying they lose at times? If you take the 10K filings from the Security and Exchange Commission on any of the renowned institution and you go through their 1 year of progress, there are days where they encounter losses and they always record. So that is one thing that you need to know. And the traders in those firms, they are just humans like you. They do have emotions. They do have eyes the way you have, and they do see things the way you see. Okay, so we cannot really say that they're the most perfect traders because they do lose. Okay, most traders are made to believe that the only way to make money is through doing what they do. Of course, it's a working strategy, but my point is, and I want you to get this clear, that there are days where they lose, and they lose a lot of money. So you must be very prepared as a trader and know that there are days where the top players do lose, with the exception of the central banks or the Feds, because the central bank, they are responsible for setting the monetary policy and regulating things like quantitative easing and all that. So, and this part of emotions, I'll cover it on the lessons on candlesticks part 2. Remember, we did part 1, and that video is there. So this is the Amacovis rule, and what I like to say is that this is my own rule that I discovered after a period of 2 years in the market, monitoring every aspect of it every single trading day. So I could spend about 15 hours just looking at the chart and recording down some behavioral characteristics, and then there's a manner in which I came to find the consistency. Okay, and there is a manner in which the market is always translated at a point. That's why I began by saying that there is nothing that happens for random. Okay, and that is exactly how the price delivery algorithm worked. So I discovered it after very complex mathematical formulas that I derived from integration and some log functions that I could think of based on what I saw happening in the market. Then I came and simplified all of this information into a standard set of numbers. Now they are referred to as the Amacovis rule. So uh, There are some key elements that normally takes place in the market, and if you look keenly, uh, we cannot say that all the orders that are placed in the market, they are placed at exact levels. We have some orders which just exist randomly, and when you work the displacement function, you can easily see that. But it's very complex because it took me 2 years before I came to make this discovery. So one thing that you need to know is that this information that I'm going to share, it's very key in the market, and these rules will help you to monitor every aspect of the market in terms of price, time, direction, and the volatility. Okay, that is a very key takeaway thing that you need to have noted down. So I said that we have the 1%, and we said we do not know how this market came into existence. That is none of our business. Okay. So the people who design this market, maybe they are probably dead, or the hidden secret is probably them who knew about it. How this price delivery algorithm exactly works. So after this discovery, the market became seamless to me, and I can easily read the market based on that and make wise trading decisions from all that. So there are some key takeaway questions that we need to ask ourselves. Why do we have days that the most renowned financial institutions lose? So I began by saying that these people normally lose, and they make losses too. In fact, big losses. So if that is true, they do lose. Why do we have that? And yet they are the key top players in the market. So there is something that is missing, and that means that we have somebody who is pretty much higher than them. Okay, there's some information that they do not know, because in this market the ultimate goal is making money, and if you have a way in which you can make money, you can use it to make money regardless of anything that can happen in the market, because we just focus on making money. So the second question is, how exactly do we have a spike after few seconds once news is released? Because this is a very key important aspect. Let us assume we want to trade a news like NFP. It's coming out at 3:30 p.m. Now, why do we have that spike? Even if you are the fastest trader, I believe that executing a trade at that speed is actually very rare. You cannot manage unless you are trading a rejection and you have seen that market going and then you start getting in. But my key element is, why do we have that spike? Immediately the news is released, just few seconds you'll have that spike. You can easily see it. Even if they knew, you cannot say that they are traders. Let me just say this. Okay, we know that we are institutional traders. We know how this market is going to behave. We know how this news event is going to be released. And it's going to be released. Let me say we want to buy the dollar and we are trading Euro USD, for instance. It's going to be released at 3:30. Now, one of the most funniest thing, in as much as we know that, okay, we cannot spare money. We need to make money. Okay, so that means that we can easily start making our entries as early as possible on the dollar pie. Okay, and that must signify some market movement. But most of this news event, when you look at them, most of those days, the market normally consolidates a larger portion of the day before those news are released. For instance, we have CPI. Go and check. We were having some consolidation before it was released, and then we were having that spike. What explains the reasoning behind that spike? That is pure price delivery algorithm. And if it's not true, we shall see, because let us just focus on what we have here. The next question is this. If we look at the market in terms of correlation, for instance, let us take between GBP USD and Euro USD. Why do we have times when one is ahead of the other in terms of volatility? There are days whereby we expect that when we are selling GBP USD, we expect to sell Euro USD. But there are days we don't have any major news event on either currencies, either GBP, Euro, or now the dollar. But you may find that Euro is buying while GBP is selling. What explains that? That gap that we normally have between those times, because you can see one is ahead of the other, and then they will, after a certain period of time, they will start now moving in their respective directions. Another question is this: on the aspect of seasonal tendency, can you explain the behavioral characteristics that 1 hour and 45 minutes of gold and JPY before uh, their move stabilizes? In this case, I mean there are days where we see gold and JPY moving exactly the same numbers of pips, okay, for this duration, and then after that, now the market takes a new shape. This similar thing normally applies also to the yen and the dollar. Why do we have that? And then question 5: why do we normally have dollar sales during statements or interviews that for instance, Powell, when Powell is being interviewed, why do we have that activity of selling taking place? And yet, what he may be talking about, it is very positive for the dollar. It's supposed to make the dollar buy, but you can see some selling activities and some exact numbers of pips before the market settles and takes a new direction. So these are the key questions that actually led me to dig deep into this research that I did. Everything that I tabled down, I was just observing the market. No reading anywhere, just observing the market and trying to do a little bit of mathematical functions and formulas that I thought from my own point of view how they will shape the market and how the market will behave. So, one thing that we have in this market, the market is normally viewed as a displacement time graph because we have time and we have price. It is just similar as a displacement time graph. That is one thing that we must know. Yes, if this is true, there are some key elements that they are normally evident in the market. One, if you replace distance with price, and you look the market in terms of volatility, you can easily see how the market is and why consolidation are present in the market. Okay, remember when you look at it in terms of volatility, okay, that in this case, that's where we have the vibration formulas coming in, and also the displacement and some calculus just coming in to explain this concept. So you will always know why consolidation are important. I don't want to go into much details about the mathematical formulas, but I just want to go straight to the point because it's all simplified. Because even if I give you right now, there is nothing that you will understand, or let me say you will have to do, because there are some key elements that I was looking at. So if this is true, you know why consolidation are present in the market. So that means that we have some set of orders which are randomly scattered on different elementary prices. I call these different elementary prices because these prices are very unique. You cannot actually know them, but while I was doing, I came to discover a few, and there was a manner in which they were behaving that, and then this led me to now what I'll be showing you. So there are elementary prices, and these prices In other words, a fraction of these orders only become active by default at specific times that are set, which changes with respect to daylight saving. 2 years observing this is not a short time every day. We expect some major news every month. So if you look at this, I came to discover that it's not all the numbers of pips, okay. It's not all orders, the way we think that we have days where, because what we know is that we know that we normally have manipulation. Yes, that we know. But apart from that, this aspect can easily tell you why we normally have specific spikes at specific times, because all these times I observe them and I master them. Okay, and one of them is actually during the news. Why do we have those spikes? So it is just due to these elementary prices. These orders that are scattered, they are normally set in response to how the market is behave, and then we will have that spike. Okay, so they explain the spike that we normally have during the news events. Okay, the scattered orders. Remember, we don't care what happens in the market, but this spike, it's very unique. These spikes are normally very unique. Their peak movement are normally very unique, and there's a manner in which they channel the market. I'm not just talking about news events. We also have some specific key elementary price that takes place during significant times. There are others that you shall see them, and when you see them, you'll actually know that we have a trend that is coming to an end and a new trend is beginning. Others you will see they will give you the retracement peak movement. So most of these things I cover them in my mentorship part of this. But I just wanted to show you this. Let us. So this is the Amacovis ruler. All the closing price of in the entire forex market at any given time, they are always related. And when you work out the matrix function on every element on euro, GBP, euro, AUD, all the major currencies that you have, you'll always get that they have a different, they move with a specific different numbers of pips, those prices, although I'll not mention that. So since these prices they are related, when you look at from the elementary price value in the market, their logarithmic function are always equivalent to 2.25. So I summed up everything to this point, to 2.25, to come up with this rule, and I've been using it for the longest time and it has been working perfectly. So we shall see by examples, and it's something that is very accurate, although I talk more about it deep in my mentorship. So but the fact that I've given you this value, you can easily use it to trade. Okay, so the rule states any peak movement in the market is normally translated by a set of standard value of 2.25 from the closing point or price. So that means you can take any point. Remember, when you look at the displacement time graph, I said we have scattered orders. Okay, and from these scattered orders, there are some things that they do help a lot in understanding, because once you master these, you can easily see manipulation. You will easily know when manipulation is going to take place. You will easily know where we are going to have a retracement and or a reversal, and you'll easily know where we are going to have rejections. So it's all easy, all in under one simple rule. So you can take any point and you multiply by this value and you shall get the actual peak movement. Okay, because that's how the price delivery algorithm works according to this rule of mine. Now this is 100% accurate because the translation must always take place. These translations really speaks a lot or helps a lot in the market. It does not just happen for the sake of happening, because I've observed and I've seen. For instance, what explains, how do you identify things like pricing taking place, fundamental pricing taking place? How can you identify them? Things like propping, when they are propping a specific pair, currency, I mean, how can you see that? Okay, but from this rule, you can easily see that because it's all evident. So just by using these numbers that I've given you, you can easily trade. But I talk more about it, how to get the retracement on my mentorship. So let me continue. Now, this is how this rule has been helpful and the benefit that I've seen, or what it can show you. It really shows or tells you the direction and the result of a news event, the most important news event days before the news is released. By this I mean, assuming we are having an FP and we are having an FP next week. When you consider this rule, you can easily know the result that will come out, because I'm speaking this from experience, and those people who have been following, who followed me last year, those people who have been following me since 2021, you know that in the year 2021, all the news that we traded, there's no single news that we lost the entire year. There's no single news that we lost, and we always, all the news fell in line with this. Last year, it's only 10 news. Imagine from January to October, only 10 news that didn't actually come in line with what we expected. But now, the move, the move never changed. The move that was supposed to, the market, that the move that the market was supposed to take, that's the actual move that the market took. For instance, what happens? Why do you think, okay, we have a news like NFP, it can come out positive. We expect the dollar to buy. But in the process, we don't see it buying. We start seeing it selling. Why do we have that? Because this is just a specific pattern that normally repeats itself. And I have used it to trade. So, number two, you can easily see and know areas where manipulation will be taking place. Just as I said, it is very easy for you to know manipulation and to have precise levels when they take place and the direction in which those manipulations will be taking place. Okay? Because we are made to believe that the institutions manipulate the market, but I'll tell you, they are not the only people who manipulate the market. Okay? And then I said you can easily see when the dollar as a pair is being propped. It's not limited to the dollar. The entire market, any pair, any currency, you can easily see. Another thing, it tells you when a trend begin or when it comes to an end. Okay. Apart from that, you can know the exact number of pips for a retracement and when they take place, either from a major trend or from a price point. All of these information that you see here, both of them I teach it in my mentorship. So, but I'm just going to show you how to now apply the rule in the market, how you're supposed to do it, because it's just easy. I know most of people have been trading and yes, they are making money, but this can at least help you. Those traders who are using support and resistance, those traders who don't know what the market will do next, you can easily use that, because you can literally trade any turning point in the market. Because what defines a turning point in the market? Why do we have market turning at different levels? So this rule sums up. Okay, I've just simplified it to a standard value that you can easily use, although I have the function that I used throughout the year as I kept on developing until I arrived at those levels. Because we have other levels that will always tell you where you are expected, other values that will tell you why you expect to see a move, the market moving with high volatility. So those areas you can easily take those trades with big losses, because we are not gambling. Because this rule is very precise, you will know what direction to take, and you shall clearly see. You will clearly see, because the translation must take place. It doesn't matter how long it takes, but always it must take place at any point. But there are some specific element that I show people to use, because those are the areas that they are the the fundamental core areas that we look on, because they are the ones that can show you if this move is going to be a move on a trend. They will show you if this, when the market is moving, the news that you expect, how will it come out? So you will always know that this news event is coming out like this. For instance, this 2023, from January up to today, all the news event that has been coming out in the market, from the dollar, pound, the CAD, I've been trading all those news, and I have been having the result and the actual move that the market will take days before even they released. And believe me or not, there's no news that I've lost since January. It's almost mid February, and all the news have been perfect. So now all the movement from a point are always 100 accurate for translation. So when this translation is taking place, these moves will always, I've said, the market will always have to accomplish them. And then it is the optimum edge in the market, because you can trade any market at any time. And then it will give you the precision in the market. By precision, I mean it will give you more levels, more price levels where you can engage and re-engage. Okay? Assuming a market is, you are sure that this market will be moving for 200 pips. What can you do if you are sure this market is moving for 200 pips? If you are a trader, you can easily compound on those numbers of pips and make quite a lot, because we are in the business of making money. We are not, there's a difference between trading and knowing how to make money. Okay, but most traders, we are revolving around just knowing forex, but in the process of making money we don't know how to make money. Okay, because people say that there's no strategy which is perfect, but for me, I have used this strategy to raise a very small account to a very exponential figure. Most of those accounts you have seen me posting, and I have used this account to raise. I've been using this strategy to raise those accounts. I remember last year, October, I raised an account of 50 USDs to 1.5 million within 3 days, just focusing on the same. Now, if you have this, one disadvantage is that, you see, this strategy actually works, but when you make too much winnings, you attract attention. So one or the other way, you may land into troubles with the brokers, because they may really want you to explain how you are doing it. But since it's something that I've used, and it's something that I know that I've never shared actually, this is the first time that I'm bringing it public. So you need to be very keen with what you are doing. So now I want to show you examples how you can easily apply it. So let me go to the chart. So this is the chart that we have. Assuming we have this market here. For instance, if we pick this level, okay, we want to see, we pick that level, we have 133 pips. So 133, when you multiply it by 2.25, I'm telling you, the translation is a must. You get 299 pips. So that means, from the closing price, always from this price, you expect a move of 99. Market must always move for those numbers of pips. So you can see, in fact, this moved without even retracing to 99 pips. So since you know this, I've worked with this and I know how I maximize on it. So there are cases where we have such where the market will move without retracing, and those are where you're supposed now to keep layering more positions. But that I cover it in my mentorship. So we have that. This is one. Let me just take a random area and see. Maybe we can use this. This is quite 75, but it doesn't fall within the rule that there are some other rules that we use. Now, from this level, I expect this market to move. We are using 2.25 times 75. I expect 168 from this level. Okay? 168 from this level. This is definitely a sell. If I'm not wrong, from this level, 168 pips. 68. 168. And you can see just around that level, we are having a cluster. Now, apart from that, there are some things that I've not mentioned on the application bit and the benefit, because we have clusters. If you have been struggling about clusters, this will actually help you to understand which clusters will be validated or which will not be validated. So instead of trying to, we know that clusters push markets. They also do the same. So this is just. Let me go even to another day. You can just choose a random day. Let's go. This is GBP, JPY, and C. So we chose. Let me just look. Okay, I can use this. Let me use this for instance. This spike here, 273 pips. 273 times 2.25. 614. So that means that from this closing area, you must have a translational move of 614 pips from that level. So you can see the market has been consolidating, but for you, know how far this market is supposed to move. So 600 pips. So this is 300. Also, I've not explained when we encounter things like this rejection. Now, you must always attain that numbers of pips before. It must always attain. This is 400 before we have any other significant translation. So you can see it has just been revolving around that area. I'm assuming you are trading this level. Now, if you know this market from this level, it must move. For that translation to be complete, it must move a number of 600 pips. So how can you use that information to make money? So this is 500, 100 pips less, and you can see by this time it moved. Now that has taken a very long time. Okay, let me just select this area. Remember, there are so many pairs that you can trade on. It's not just this. So this is 250 from this level here, 250. And the funny thing is that it's supposed to move 562 pips, 562 pips. Translation from that level, you're supposed to move 562 pips. So this is first time moved for 217. Then we're having that consolidation, and then at that exact level, it moved for supposed to have 500. Moved for it's supposed to have 562. It moved for 527 pips. Okay, now coming down, when you look at it, when you are just coming down, we are just taking random area. So this actually there for those 562. You can see at exact that level we are having that cluster, and we have a new level. So this you can set it as a new level. Once that is done, let me just set this as a new level, and I want you to observe what has been taking place. Let me now delete this. So most of this I share it in my mentorship. So if you want to learn more, so if you look at this level, let's see. The market has not gotten up to that level. Okay, let us see. At the same level, you can see December, you will have traded that level. So there are some rules which allow us to trade on this level. Just numbers. You are not even Forex needs to be simple. You take any point and you multiply. So you can easily see. Now, let me go to another pair. Pair like gold. So this is gold. For instance, let me just pick a random point. I'm not using the specific ones that I use, but you can just use any. So that is 312 times 2.25, 702. So that means from closing this point, this market needs to move 702 pips from that level. So assuming you are a trader, 702. Let us see if we manage to get 702 pips. It must always attain. So you can see that it moved for the highest that it got to was 600. Yes, 600 pips. Is 600 really? Yeah, 600 pips. Just from that level, 600 pips. But it was supposed to move for how many pips? 700 and less less 100 pips. So even if it does not attain, I'm sure from this level that this market needs to move for those numbers of pips from this level. Anytime that it touches just from this level. Now, when you look at it from that level, we expect 702. This is a 700. Yeah, it moved for 700 and 702. Okay, remember I've just used that level. So, and this trade, I took this trade. Okay, now we're just selecting random areas. We don't want to, I'm not, if you want to know the specific one that I have used to grow those accounts, then you can just contact me. I'll teach you. Now, okay, let me go back. Not, you can just go anywhere, any point. You can go any point in time and see. So, for instance, let me take a random area like this. This is 150. Assuming you're trading short term, 150 times 2.25. 300 and 337. 337. So from this level, we expect the market to move for 337 pips. So this moved for 200. Still, you will have made money. Okay. Now, when you check on the upside side, the market moved for 317. Okay. We are just assuming you picked random areas. 317. Remember, we are looking at 337 pips. So this is the strategy that I've used. 337. So you can see there. Once it attains that level, we can have another level there. So let me clear this level, the ones that the initial one, and have a look at this level. Let us have a look at that level as time passed by. So you can clearly see how this level was, how the market was reacting at this level. Okay, so making money from the market is very easy. You just use a random level. Okay, let me see if you can see that level. It is still the same level. You can see that level how it is being used. So this translation is one thing that I've used and have been making quite a lot, just trading based on this. So I think okay, let me use this for instance. I think we had used this. So 200 and 209. 209, what percentage? 2.25. So 9. So that is for 70. So we expect this market at this point to move for 70 pips until when you see when that level, when the market achieved that level. So is almost 390 just off that level, assuming you never got the first. So you can see how these levels are being used. Looking at 470. 70 just there. Yeah. So this is 471. But, you can easily see. Okay, we still have another level. The still have that level, and you can see the same levels. The market is using it and reusing it. So we are in this level. So coming up this level where has been used. So this market selling for you, it's not a surprise. Even though I could not have used that, there's some that I will have used here. Okay, so if this works in all market, any pair, let's check GBP and ZD and see. Let me just let me take this. Here, this is the must. So all in all, you can see 59. So from off that level, you expect to have about 59 to 132. So you expect to have 132. Supposing you have seen this move just around here, and you know that we are going for 132 pips. 132. So this is the sure trade. Once you take it, it's a sure. You are not like gambling. Provided you have seen, you have used the right point, your work is just to engage. So you can see the randomness of the market. You don't have to follow market structure. You don't have to just use support and resistance. You don't have to. There are so many things, but it's just simple the way it is. And one of the best things that you'll eventually make money just trading simply. And so, for instance, if I had used this level, I know that I'm supposed to sell this market. Yeah, here. So we have 56. So I'm supposed to sell this market. This market must supposed to go for how many pips? We have that level there, the one that I've used. So 56. Now, we don't have just this one rule. We have others, the ones for retracement, for trends. If you want to know this market will trend. So this is just a general rule that I've used to just grow that one account. So we are expecting 126 pips movement. 126. Has it attained? You can see at that level we have a cluster here. We have a cluster. So that means once it gets here, I can easily take a sell from this trade. Okay. You just know at this point, this market must get to the 126 pips. So if you saw, for instance, you can see the first time it came and got rejected. Right now it has made that, unless we have another one, because I've seen another one. Apart from that, I can also see one here where the market is currently. Yeah. So how many pips? I'm just using there's a criterion in which I select the pair that I use, but these I'm just working the candlestick that I use. This I'm just working randomly. Okay, 69. So 155. So first time the market moved for, let's see if it attained that, because this is already a move that is gone. And you can trade in that rule as much as you want. 155, 130. So taking a sell here, it's not harmful. Taking a sell, it's not harmful. Then you target. Now, there's a manner in which you target the pips, because most of my trades I take there are others that I'll keep holding because I know this market will go without a rejection. Okay, so those you can easily compound, but there are others you will always have some retracements, and those for retracement you can trade those moves the way you want, because they are also safe moves for you to make more entries. Now you can easily see how the market is easy. Forex is very simple. You don't have to complicate it. I have used this strategy to trade, and I have not. more all the trades that I've taken I've not lost up to this point. That is something that I can guarantee I've not lost because it's something that is very direct and easy to use. Although we have some other two rules that I've not shared here, I've not disclosed, but those I show them in my mentorship. So all in all, I want to thank you for taking your time and going through this video. I hope you will find it best if you subscribe and also learn more because this is not the end. Okay, this is not the end. I'm also thinking of when we get to about 1,000 or so subscribers, I shall be doing live market analysis with you. I call out trades with you here. So don't worry. Now, we can call it a day. Thank you very much and may God bless.